Drop it.
Hello and welcome to Be Real, the Maryland Real Estate Podcast. I'm Brad Cox with the Vesta Group of Long and Foster, joined by my buddy
and amateur handicapper, Michael Becker of Sierra Pacific Mortgage. I say amateur because I know how to read a racing form. I'm not professional. I had dreams of maybe, or my father did for that matter.
Yeah.
When I was a young man, he taught me how to read a racing form. He saw a story about a whiz kid, young handicapper who was making lots of money for his dad, so he figured he'd give it a try and teach me how to read a racing form and try and figure it out.
Well, you guys racing horses.
We owned thoroughbreds when I was a kid. Yeah, we raced up north, not in Maryland, but in southern Pennsylvania, Penn National Race Course.
Yeah.
The horses were a little less in dollar amounts than they were, or ran, like claiming races. Well, this is going to, I can't even imagine. He had like $2,000 and $2,500 claiming races. That was the low end.
Wow.
Yeah. And the high end was maybe $15,000 or $25,000 claiming races. Nowadays at Pimlico, I can't imagine what the cheapest claiming races. I imagine it's probably 15 or that's what you can actually. You could have claiming means you can go in and buy any horse.
Oh yeah,
in a claiming race. Yeah.
Okay,
that's the dollar amount. Yeah, you can go in and just buy them. Right.
Wow.
Anyway, I bring that up because yesterday was a good day for the Baltimore.
Yes,
Maryland
it was.
Area.
Yeah, it was. Yeah.
The Preakness. What running of it? Do you know? I'm throwing you off. I'm sorry to throw it at you. 140th. I mean, it's been around forever.
It has. Yeah.
It doesn't say here in this headline. I should have known this before I brought it up.
That's okay. No, I don't know the year, but
well over 100 years. I mean, it's been doing the math. Oh, so it's been 12 and 23, 35 years since I went myself.
Wow.
To the Preakness.
You know, I've never been other than. I worked it one time, but other than that, I've never been.
The old days in the infield where there was a mad rush, right? You used to, I don't know, I think it's much more ticketed and you stay at a location and you have to buy all your alcohol there. Those days,
yeah,
you were allowed to bring in, people brought coolers in,
everything, right, yeah.
It was there was the running of the porta potties.
The porta potties, right.
And everybody get battered with like water bottles or beer cans.
Right, yeah.
Got a little out of hand, so I guess they had to tone it down a bit. But you were telling me you predicted the winner. Like all people who predict winners,
I didn't bet.
Did.
I'm sitting at dinner with my wife and my son yesterday, and I said to them, I haven't bet. I'm going to unofficially bet with you and say I'm putting $100 on National Treasure.
We went off at 5-2. The morning line was
4-1.
4-1. So it's interesting. You know, Mage was the Kentucky Derby winner. Was the favorite,
which
makes sense going in.
Yep.
But and he was a favorite at 8-5, which means if you bet $5, you win 8.
Yeah.
5-2 means you bet 2, you win 5, or thereabouts. So a $2 bet wins you $7.80. You get your 2 back, and then $5.80. So if you would have put $100 on him, got to do the math, you would have. So you'd have won a few $100.
Yeah. Well,
it's always fun to do.
Would have paid for dinner.
That's always nice,
great,
isn't it?
Which would have been great
when you're eating for free.
Yeah. You know, Mage was crowdfunded. That's kind of cool.
That's amazing.
Is that a new thing in the industry?
How many people had? I mean, when I was watching the story, watching the Preakness on TV, how many people were involved with Mage? I was like, geez, they're like half the Preakness.
Well, I think it was like 400 people who actually had a fractional share, but they had 3,500 fractional shares available. So 400 people bought those, and for about $170,000, and that investment's now worth about $5 million.
The money is in what they call syndication, the breeding rights of major stakes winners.
Yeah,
that's where the $5 million is coming from, and but there's how many people who've crowdfunded 100 and got zero buckus, nothing.
I'm sure, right?
So it's another long shot. It's a long shot that came in.
Yeah.
It's so tough. It kind of shows you how tough it is to win the Triple Crown. First of all, it's 2 weeks after the Kentucky Derby. That's not a lot of rest.
No.
For a young horse. The horses that came in were all fresh. None of the other horses had run in the Kentucky Derby, so they're fresh. And then you had to know something was up when Bob Baffert brought his horse in here to run in the Preakness. It's his 8th Preakness. All-time leading. So anyway, it was a good day for Baltimore, and they got. Was it just starting to rain? I think they got the racing before any rain.
I think it did, yeah. And of course, the horse that apparently I train,
Brad Cox.
Brad Cox. Right. First mission got scratched.
There people were
I get
texting you
that
saying,
all
"What
the
are you
time.
doing? I was
I
going to
get
bet on your horse."
Right. I get that all the time.
7 horses. Yeah, there weren't a lot of good payoffs. I'm looking at it here. The exacta paid $15.90. That's not a trifecta $24.20.
Yeah.
I bet a bunch of people had that, and the superfecta was only $72.40. Anyway,
yeah,
another good day for Maryland. Let's hope it. Watching it on TV, it looked like they had not updated, and the Preakness looks on other. Pimlico Racecourse looks a lot nicer, specifically the grandstands and areas that people hang out.
Yeah.
Our new wide receiver, Odell Beckham, did the call for the jockeys, Riders Up. That was pretty cool.
It was. Yeah.
And John Harbaugh, coach of the Ravens, didn't do any handicapping, just went with Mage, the favorite.
Right. Yeah.
I wouldn't have done it. There's not enough money to win on Mage to place that bet at 8-5, and it is so tough to win. It's a shorter race.
It is.
It'll be interesting. I wonder how well he'll do in the Belmont, which is a mile and a half. It's a lot longer.
Yeah.
It's a quarter mile longer than the Kentucky Derby and 3/16 of a mile longer than the Preakness. The Preakness is 1 mile and 3/16. Do you know what a furlong is?
I don't.
A furlong is 1/8. So they have races. When they go describe a race in terms of a furlong, that's 1/8 of a mile.
Do you know what a cubic is?
I'm not Noah. I don't need it now. But at least I knew where the reference came from. So give me points for that.
I did. Yeah.
All right. Enough chit chat, Brad. We want to keep this podcast.
Yeah. So what are we talking about today?
So we're gonna do our little rundown, where we talk a little bit about mortgage applications and rates. You do a little bit of the real estate activity, so people know what's going on with the local market.
Yep.
And then we have a big topic where winning the
called
house.
The Scoop.
Called the Scoop.
Yep.
It's called our Scoop, and it's.
Yep.
We're going to do talk about how to make your offer stand out from the crowd, how you win.
Yeah.
Because it's still very competitive.
Highly competitive.
Even though rates are high.
Yep.
And then at the end, we're going to do the Unreal section, where we're going to talk a little bit about a Gallup poll, and a large percentage of people said it's not a good time to buy. They may or may not be right, and we're going to just comment on it and give us our take on that.
Yeah, I think that's great. And then we have our spotlight to wrap things up. Yep, with a great local restaurant. Right. So
let's get right into the rundown, Brad.
Yeah, have at it, Michael.
I'm going to talk a little bit about mortgage applications. Well, they decreased for the week ending May 12th, 2023.
Yeah.
The overall index was down 5.7%. That was a big drop. It was a big drop in refinance activity. They dropped 8%. Purchase index dropped 4.8%. Doesn't surprise us.
Right.
Because as of the writing of this, mortgage rates were at 2 months highs. It was, according to the Mortgage Bankers Association, they said 6.57% was the average rate for the week ending May 12th.
Right.
We only wish they were that low right now.
That would be nice.
Folks, I hate to give you the bad news, but that week after that survey, the next week's survey should show much higher rates. We had a bad week in interest rates, 5 consecutive days. Every day the rate's getting a little bit worse. It's 6 consecutive days in total. It's been a long time since I've seen that many days bad.
Yeah.
I'm not a fan of floating interest rates or floating a mortgage rate in this market, but I probably, if somebody is under contract, I'd like to see what happens on a Monday, and I might float for a day to see some improvement. At some point, you tend to get a little rally. Things get oversold in the bonds. The reasons are just still unclear picture on inflation, what the Fed's going to do. Fed officials were out talking about mortgage rates and how they keep reiterating how they still have work to do with it. The unemployment claims came down on Thursday. The week before, there was a big spike, and everybody thought, well, maybe this is what we're going to see. We're going to see employment slow down, so maybe inflation will slow down. Well, it turned out that there was a lot of fraud in Massachusetts that 1 week that we had high. And that created one massive, because all the decline was the decline in the claims in Massachusetts. So we will see. We're getting close to the high. We're still in a range. It's a slight breakout from the range we've been over the month and a half, but we're still range bound that we've been since like early March.
Right.
If we're going to see a breakout, we'd like to see a breakout to the lower side, not to the higher side, because it will impact some people's choices whether to buy a house or not. So, in a healthy housing market is a healthy economy for the U.S.
Yeah.
So,
yeah. Yeah. Great.
All right, let's see what you got. I wonder if it's similar to what I just said.
Well, so maybe a little bit. Yeah. So active listings, we actually had a little bit of an increase, which is always a plus. Thank you, sellers. 8.45% up from the previous week. Pending sales went down 8.34%. So I kind of like that ratio. And then settled sales went up 21.59. Wow. So we had a strong.
What was the date of
last week? But
this report?
This is as of yesterday, Saturday.
Okay, the 20th,
yeah, May
20th.
Yeah, I try to keep my my dates really, really up to the minute. The settled properties, because we went from last week was a little bit of a dip. That's why we see such a huge increase.
Oh, so the week-to-week number.
Yeah.
Gotcha.
Yeah.
So it was bound to happen.
It was normalizing. Yeah. But it's still up a little bit. So
it's better than it continue declining, or
It is. And all right, so then properties that went off the market, 8.44% up from 237 to 257. Not a huge change, but average days on the market are down.
Wow.
7%. Down 7.13%. We're down to 23 days on the market average across all of Baltimore Metro, and in Baltimore County we're down significantly. Baltimore City's the one thing that's keeping that up where it is. Yeah. Median days on the market flat, 6 days. Total volume back up 22.23. Again, we had the dip last week, so we're normalizing this week.
Sure.
So we're back up to 257 million in total volume in the last 7 days. Number of homes getting concessions was flat. The number was flat, but because volume was up, the percentage was a little bit of a drop, 13.59%. We went from 31 to 27%. And the average concession, though, went up a bit, 11.92% up. Now, the list-to-sold ratio, the one that we've been tracking.
It's a big one. It's right around 100%. It's super high.
Yeah.
These
So
days,
last
people
week
are getting their asking price.
Yeah. So last week it was 100.68. This week 100.89. So
a little higher even.
Yeah, just a little higher even. And the median sales price went up 4.23%. We're at 370 right now. Okay. And then the last thing that I wanted to mention is just the Bright MLS. Lisa Sturdivant's the economist there and does a fantastic job of sending out the weekly snapshot. But in that weekly snapshot for the Baltimore metro area, they have a good number that we like to watch as a leading indicator, and that's the showing activity.
Okay.
So year over year, down 29.6%. From last week, down 14.4%.
Interesting.
But if you look at the comparison against 2019, and I mentioned this a couple of weeks now, but if you look at the comparison against 2019, we've been above 2019 levels. 2019 was the last time we had what I'd call a normal market.
Yeah, pre-COVID.
Pre-COVID, and we've been slightly above 2019 levels all year except for 1 week. Okay. So activity's pretty good.
Makes sense. Well, I mean, you know why? Guess what? A lot of college graduations last week. A lot of things going on with families. You might see some showing slow down for a little bit here, and then once we get past the graduation issues,
and then it'll tick up.
Things
will. You have vacations. Things will happen, but I do expect to see showing activity picking up again. All right. So, buyers, message for you: you got to get creative. Which is why this episode
there's
is going to be
inventory
so
out there, but it's not a ton, and it's a very competitive market.
Yeah,
right?
So that's why this
what your story is
so important.
The reason you're giving out this information to show.
Yep.
Look, for this market, I think out of all your numbers, they're very important.
Yeah.
But the ratio of list to sold is super huge, and it kind of shows everything they need to know about today's market.
Yeah. Yep.
All right. Well, we're going to
good point.
Yeah, when we come back, Brad, what are we going to talk about? Why don't you say it?
So then we're going to get into the scoop, winning the house, top 10 tips to make your offer stand out from the crowd.
With maybe a bonus.
With maybe 2 bonuses.
Uh-oh.
All right, so we'll be back in just a sec.
Try it.
We're back to Be Real, the Maryland Real Estate Podcast. I'm Brad Cox with the Vesta Group of Long and Foster, sitting next to
Michael Becker of Sierra Pacific Mortgage.
the inimitable Michael Becker.
The always wrong when he handicaps Michael Becker.
Well,
it's been a while. I always place a small bet on the Triple Crown races.
Yeah, sure.
And I had an exact, and the 7-horse screwed me.
Well, like I said, I was only going to bet on the 1.
Yeah.
But I failed to do it. Right? You miss 100% of the shots you don't take.
100% of the time.
Anyway, so Michael.
Yes, sir.
Our episode is a really timely episode.
It's a good one because you know what? It takes a knowledgeable realtor and a good lender to figure out many of these situations and where you'll be able to, whether or not you can do some of these things.
Yeah, well, and I think what you said is super important. It's the teamwork, right? It's not just the realtor. It's not just the lender. It's the whole group working together.
Well, there's nothing but pain going to come from an agent, real estate agent, coming up with an idea and not running it past the lender first.
That's the worst.
To get an offer accepted and then running it. Oh, we're going to run into trouble. They don't have the money to do that, or their debt ratio can't handle that, or so you got to work together to figure out the best strategy to help win an offer. And when an offer gets submitted, if it is if it's a good lender and they know what they're doing, that phone call sometimes from the lender to the listing agent can be
huge. That's huge.
A lot better.
I love to do that. And in fact, well, this isn't one of my suggestions, but I've even had the title company call them.
Interesting.
Yeah. Nobody does that. Nobody does that.
What do you use? What does the title company say there?
It's just about how we all work together as a team, and how,
I didn't know if they had maybe
we've got great
pulled
processors. We do, so. But the point is, showing that it's a team, a strong team that works together all the time. That makes a big difference.
Right.
Yeah. All right. Well, listen. Let's get into the top 10 ways to make your offer stand out from the crowd. Talking about winning the house. All right. So, item number 1 is not one that helps you very much, Michael. I
don't care about that.
But it is probably one of the best ways to improve your offer, and that is to pay cash. And there's this old adage, right? Cash is king. And the only reason why that's the case is, well, there's 2 things really. Number 1 is that you're showing that you have the financial means to buy this house without
pretty impressive.
financing.
Anybody who can come up with a cash offer for several $100,000 piece of real estate.
Absolutely. So you're showing that you're a very strong buyer. The other aspect of it is that because there's no lender involved, there will be no lender required repairs. And so
no appraisal necessary.
Yeah.
No lender required repairs.
Yep.
No underwriting delays, although that's not happening these days.
Typically not. Yeah, but
maybe when the cash offer started really popping in 2020, that was something. You know.
Yeah. Now, did you know there was an article in money.com pretty recently? Yeah. Nationally in 2022, more than 36%.
Crazy, that number.
36% of the single family and condo purchases were cash. That's up from 23% in 2020.
It doesn't surprise me if the people doing the whole cash offers had sold or have a home to sell, because a lot of people have so much equity they may be able to buy that next home. But I know that's not necessarily the case.
I don't think that's the majority of them. Now, that part of it, I think, is coming from institutional investors.
Yeah.
And then I think I don't know if I necessarily would suggest this as a financial strategy, but there are plenty of people who have purchased with cash by rating their retirement account with the idea that they could refinance after they after they own the home, they could refinance, and then they could put that money back in their retirement
that is a
account.
I mean, some people used it or took money out to put it back in after they sold their existing house.
Yeah, and if you have 60 days, right, to do something like
it's called
that
a rollover.
Yeah,
right?
without penalties. So,
but you only do it once a year, and
right.
It is a risky strategy, but it's something I've continually been surprised at where people are getting all the money. Now, there had been some pretty strong stock market gains leading up to the end of 2021. There was plenty of cryptocurrency gains prior to some of them crashing, and they've rallied a good bit here of late. And you know, I don't know. I'm shocked with it. But if you want a house and you have the means,
it's a high number. Yeah.
Well, and the truth of the matter is, when rates were 3 to 4%, it probably makes sense to get a loan on a house.
It's almost
and
free
pay
money.
that interest rate and let your money grow.
Yeah, absolutely.
Have better returns on that. You know, historically, the stock market with dividends is somewhere between 8 to 10% over the really, really long term.
Right.
You're going to be better off letting the money grow and paying a lower percentage rate interest. But where rates are now, and given
That
the
gap's
last,
a lot
they've
smaller.
rallied.
Yeah.
Stock markets have rallied a good bit here lately, but all of 2022 was a pretty bad year. They were pretty much all down.
Yeah.
So
Yeah.
it kind of makes sense as to why more people are doing it. So yeah, if you have the wherewithal or the means to make a cash offer.
Yep.
Now, if you're the listing agent, Brad, I have
Yeah.
a question for you. And you get a cash offer, but you get a super strong loan offer that's higher. I guess it's the sellers. I mean, the seller's going to decide. What do you think they're going to say?
Well, it really depends, because it depends on what is there a gap between the two purchase prices? How well qualified is that buyer with the lender? Is it a good local lender? Is it somebody that we know is going to get the deal done? There's all sorts of factors that go into that calculation when you're the listing agent.
Yeah. All right. Well, we may talk a little bit more about that when we get to number 3.
Yeah.
Because I have some things to say, but I don't want to dwell on paying cash because it's obvious. It's a great thing. If you have the means to do it.
You can. If you can do it, that's great. Yeah. All right.
Then when rates dip, give me a call and I'll refinance you and give you your cash back so you can invest it and let that money grow.
Amen
How's
to that.
That's
great.
Effort
sure. Absolutely.
It would make sense a lot. You know, if rates get lower, I think it would.
Sure. All right. Item number 2. Get fully pre-approved for a mortgage and from a strong local lender. So if you can't pay cash, this is one of the best ways to really make your offer stand out.
So what do you mean by pre-approval? Because you have you have 2 terms in here called pre-qualification and pre-approval.
And there's a difference between pre-qualification and pre-approval. Pre-qualification is, well, Michael, you're the lender. You talk to a buyer, you get on the phone, you ask them a couple of questions.
So if I've asked them a little question, I pulled a copy of the credit report, I know where the credit is, I know how to price the loan based on what they've said. I've put in the data for their assets, and I've put in the data for their income, and I've run automated underwriting, and I get an approve eligible or approve accept, depending which underwriting system I send it through.
Right.
Means they're good to go.
Yeah.
But I haven't verified anything at that point.
Right.
You have to verify somebody's employment, their income, their assets, to make sure that they're okay.
Yeah. And so that's the difference between the pre-qualification and the pre-approval, is that verification step happens. The thing with the pre-approval is you're pretty much just waiting for an actual property and an appraisal, and the loan would be good to go.
So technology is really important to get this super strong pre-approval these days.
Yeah.
You can, for many people who work jobs or employees, electronically verify both income and employment. If you do that, the automated underwriting system, and you do it correct, you know what you're doing, will accept that. So meaning no pay stub, nothing else is done. Okay? You can also electronically verify someone's assets. Basically, they tell me their assets, their account numbers. I can send them an email. They go into their phone, and it's just a little information on like a couple of the questions they ask. And this company called Finicity will electronically verify your bank account balances. So if those things are done, and I run automated underwriting for a to-be-determined property, you're pretty much pre-approved. It's only going to be the property, the appraisal, and things like that. Now, if you really want to make a super strong offer and go another step, I could put in the address of the property you're interested. If I run automated underwriting, you're putting a 20% down payment or larger. And I get an approval that accepts the value of the property, meaning no appraisal is necessary, has electronically verified your income and employment and your assets. The only thing we need to get is title work, and we're done. You can close pretty quickly. And that's super strong. It doesn't get much stronger than that.
And the letter that you send to the listing agent can reflect that state. So
It will. So here's something to talk about from a regulatory standpoint or the lender. Let's say you do that. You decide to do that and try and make a strong offer. Since I've entered and I know the address of a property, I have the 6 items needed to issue a loan estimate.
Yeah.
I either have to decline or cancel the loan, or I have to send out the loan estimate, these disclosures. And most often I want to send the disclosures out, even though they're not under contract, because if you have those 6 items, if you put an address on a pre-approval letter, you've also deemed as having those 6 items, of the subject property. So you have to get those things out. But it's not a big deal. If it's more work for me, I'm happy to do it.
Just
if
to
it's
make
going to
that
make the
buyer,
difference.
Yeah, absolutely. It's about making the offer stand out. Yep. With regard to the pre-approval, by the way, Michael, you mentioned if you're putting down 20%, so the down payment can also make a difference if you're only putting down the 3.5 or 3% or something like that versus somebody putting down 20%. You look stronger if you can put down a larger down payment.
I would agree.
Yeah.
It depends on the loan type, too.
Yeah.
I will say this, that if people have plenty of assets, I've had some people who've had the assets to put a large down payment, but they qualify for a VA loan, which has better rates than conventional loans.
Right.
And if you're disabled, there's no funding fee involved. So you get a deal whether you put 0, 5, 10, 20% down, and many people rather have their money work for them.
But if they're trying to stand out, having that larger.
Well, in that case, I would say I don't disclose too much, but I don't think it would be bad if I said, hey, the borrowers have hundreds of thousands of dollars. They just want to finance as much as they can.
Yeah.
Something like that.
Sure. Yeah.
Yeah. But I hear what you're saying. That does look. I get it. It does look like somebody might struggle, or the thought process, if somebody has a small down payment, they may not get underwritten approved. Funny thing about that is, I sometimes find it easier to get somebody approved with 3.5% down who's never owned a house before, has student loan debt, who has a debt-to-income ratio at 55% through FHA, than a self-employed borrower who's going with conventional, whose income might, an underwriter might question. So it's interesting how people will look at pre-approval letters and look at it and maybe think, well, this might not be a strong buyer. And it's not always the case.
But good listing agents will pick up the phone and they'll call the lender and they'll ask a few questions. So the whole point is, when you're talking with a local lender and you get somebody who's a really good, solid local lender, they know the area and they know the different tax rates and they know all that, ins and outs. They're going to be able to represent you and represent the strength of your offer better to a listing agent.
Right.
Yeah. All right. So number 3. Offer a competitive price. Now, it's not always about price, but
a lot of times it is. I mean, if I'm selling a house, and whoever I'm selling to the top bidder, as long as I feel comfortable about them being able to close the loan.
Right. So when I say it's not always about price, that doesn't mean the price is unimportant, but sometimes the seller will need something that's more important to them than price, like a flexible move, and some other things that we're going to discuss.
Cash offers. How would house flippers ever get how many, for my investment property, how many calls I get about investors
constantly.
who want to buy my house, and they're doing all cash offer, and they'll pay all closing costs.
Yep.
Obviously, but they're going to offer a much lower price than I would get on the open market.
Yeah.
Because they have to make money somehow.
Yeah, they do.
But some of the ways we should, if you're going to offer competitive price, can mean several different things. Well, it can mean obviously competitive means go over list.
In this market, it means go over list. Yeah, but if you're in a regular market, you may not have to go over list price. And in fact,
they come in at list price and think that's a super strong offer.
Absolutely.
In this market, it means going over list.
Usually it means going over list.
But there's a couple things you do when you go over list. You can not only go over list, but you can also have a gap.
You can cover the appraisal gap. So if the property doesn't appraise for the purchase price, if it comes in lower than the price that you've agreed to pay, you can, as a buyer, in cooperation with your lender, agree to cover that gap.
I've done this both as a buyer of a home and as the lender.
Now, there are a couple of things that go along with that, too, that a lot of people forget, right? I've seen all sorts of variations on these letters that say, we'll cover the gap. If the listing agent hasn't verified that the funds that they have to pay for that gap aren't needed for the financing on the loan, that's a problem.
Brad, what you're talking about is, let's say somebody has An extreme example for me personally, I had somebody recently who had a $60,000 appraisal gap. They went over list, and they would cover any appraisal short. They didn't go 60 grand over list,
Right.
but to make it strong, they guarantee, because values were going up and they weren't sure an appraisal would hit.
Yep.
So they went 60,000. Now they had the assets. What if they were going to put 3% down and they only had $40,000 or $50,000? They don't have the 60 to cover it.
Right.
Many cases, what happens when somebody were to have to cover an appraisal gap that huge, they probably would switch their loan around from a 20% down to maybe a 10%
to a much
down.
lower percentage, right?
If they had to cover the gap.
Right. So that factors into the relative strength of the offer. Right. So all those things need to be considered. So yes. So when you're offering a competitive price, it's about understanding what's happening with the market. There was a recent property that we just got our buyers under contract for, and I said to the buyer, who was a very strong buyer, I said, "Look, this house is desirable. That means, and there's a lot of showing activity. We can look when we go to schedule a showing. We can see if things are blocked out a lot, which means there's a lot of showings going on.
Give you an idea.
Usually, and so if you look at that and you see a lot of activity and you see people that you're coming in after and people coming in right after you're done, you have an idea that, this is going to be a property that's getting a lot of attention. Well, all right. So then you have a conversation. You say, this house is going to likely go over list. It's well maintained. It's updated. It's what everybody's looking for. Just because you like it, good chance
everybody
other
else
people's
likes
going to like it as well. So I said to her, and it wasn't a super expensive property. It was around the median sales price. And I said to her, feels like people are going to go over list price by X. I want you to do
X plus
$2,500.
And you got the offer.
We got it by $2,500.
So that's, from working with a seasoned realtor, that helps. Be given an idea. They should have a sense for it. Nobody has the future. And the listing agent can't give you an idea what people are going over list.
And you know what's funny?
They'll tell you, give us our best offer.
Right. So think about that too. When you go over list, don't just go over list by, let's make it 10,000. Let's make it.
No, you have to think about what everybody else is thinking and then try and beat that.
Yeah.
Can you use an escalation clause to do that as well?
Maybe. And it depends. Right?
Escalation clause is where you'll say you'll beat anybody else's offer by a certain amount.
And some listing
a lot of times that competitive price offer you're going to make is going to have maybe a combination of those things.
Yeah.
Over list.
Well, maybe. Some listing agents like the escalation clause. Some don't. Some sellers don't. So it just depends on, you have that conversation as a buyer's agent.
Why wouldn't a seller like it because they think they're just trying to beat somebody by a little bit?
They just want highest and best. Yeah,
gotcha.
They just want highest and best. So anyway, all right. So that's offering the competitive price. All right, item number 4, increase your earnest money deposit.
I hear this all the time. Why is that?
Well, because you're putting more skin in the game. You're showing we're really committed to this property. You're putting more at risk, because if you should back out from the deal for a reason that isn't that for an unjust cause, that earnest money deposit that you made could be at risk. And so you're putting more money at risk. You're just saying, look, we really want this property. And so I see agents who will do, put $1,000 down, 1 to 2% is a good barometer to think about.
Sure.
And if you're in a very, very, very competitive market, you may want to go higher than that. Gotcha. But that amount it just shows that seller, look, we're really committed to this transaction.
Not only committed, but you're also liquid enough that you can write a $10,000 or $20,000 check.
Yeah, absolutely.
Or wire that money into the title company that easily that you don't have to move things around, that you're that liquid.
Yep.
Okay, I get it.
Absolutely. All right.
Number 5.
Be flexible with closing dates.
And this can mean a couple different things, I think.
Well, so I want to narrow this to one specific thing, which is just, if the seller's already gone, they may want to quick close.
Okay.
If they've been in there for a little while and have accumulated a lot of stuff, or they've got kids in school and they need to wait until the semester's over, or they, for whatever reason, need a little more time, they may want a longer close. Your ability to have flexibility with that may make the difference. And that's one of the things that I was alluding to when I mentioned before it's not always just about price. It can also be, can we be flexible with closing dates? A buyer that says, I want an answer to this by 24 hours and I must close in 30 days.
Yeah.
This isn't the market. This isn't the market to pull that kind of stuff.
It also kind of shows, depending on where you are in life, whether you're renting currently or have an existing home, if you can be flexible, that you also have the financial wherewithal to handle whether. Unfortunately, a lot of people buying houses these days, they're renting now, and they may be month to month, but still have to pay a month. That they have an overlap of paying a mortgage payment and a rent payment for a month or so. So that's money out of pocket. Yeah. You'd like to be able to time that perfectly, but
ideally,
unfortunately, it's a seller's market. So if you want to get the house, you have to work around the seller's schedule.
Right.
And then the other thing, like you said, sometimes I want to have a long time to do it, and I got recently a 60-day contract on a house.
Yeah, sure. And it's just really it's about catering to the seller. What does the seller want? What do they need? Okay. All right. Number 6.
Waive contingencies.
This is with caution.
Absolutely.
Right? There are buyers out there who are waiving all sorts of contingencies, and it's a risk. It's a big risk. Can be a very big risk.
Well, what's the risk? So if
there's
you waive,
there's a couple of different kinds of contingencies. There's home inspections contingencies. There's financing contingencies. There's appraisal contingencies. Right. All sorts of things.
So let's go for one financing contingency. If you waive that and you're not really,
you don't get approved.
You get approved. You could potentially lose your
earnest money deposit.
Yeah, earnest money deposit. A home inspection. If you don't waive, this is where the caution comes in.
Yeah.
If you like the house and you've looked at it and you feel pretty comfortable, you can make an offer where you have the right to a home inspection, but you waive
the right to cancel.
Cancel based on the home inspection, unless something major comes up.
And what we've done typically lately that's been pretty successful is we say, all right, we're not going to cancel for any single item, under this amount. So if it becomes a really big issue, we still have the right to negotiate or cancel. But for most things, we're not worried about it. And that's we've been very successful with that strategy.
Yeah, I had the opportunity. I bought a house and waived I had a right to a home inspection, but couldn't request any repairs.
Yeah.
But if the home inspection came back and there was a defect in the property,
you could cancel.
I could cancel the contract. That seems to be a reasonable. I mean, because when it's a buyer's market or it's even a balanced market, you can get buyers out there who will nitpick. Little repairs, and it'll drive a seller crazy.
This door sticks when I open it. I have to. You must fix that before we
get out your shaver.
The window seal is broken, and there's a little clouding in the window. That must be repaired before. Yeah, that stuff's not getting done right now. So don't think about getting any of that. But I had a buyer. We had the right to the inspection, and here's one of the reasons why it can be a risk. And you've got to consider the totality of the situation. This house had what looked to be a fairly recent roof. They also had solar panels on there that they put on right after they replaced the roof. Mm-hmm. Okay, but if you got to instantly look at, if there are solar panels on that roof and those solar panels have to be removed to fix that roof, there's a cost for that as well.
Yeah.
So it's not just the cost of the roof repair. So when we had the chimney inspector get up there, and he sent me a video of how spongy the roof was because he was stepping on the roof, and you could see his feet depress, several inches into the roof each time. That was a big concern, and the sheathing on the roof was just shot. And so they had replaced the roof but hadn't touched the sheathing, and that was a big mistake. Well, so that whole roof needs to be replaced. Well, guess what? Expense. Bringing that solar off, that's an additional $4,000 to $5,000 to have it uninstalled and reinstalled. So in addition to a roof repair, you've got another $4,000 or $5,000. So you got to think about all those things and what might happen. So when you're looking at that home and you see solar panels on that roof, and this is just one example, but you've got to look at what am I at risk for, and consider that when you consider.
Got to be cautious, just like you have to be cautious with the appraisal contingency, waiving that. If you have a lot of money to cover a gap and you're okay and you really love the property, then okay. But if you have limited means, like I waive. It depends on the type of property. I keep bringing up personal things. I remember the Bethany Beach condo townhome that I bought. I waived the appraisal contingency, but I had plenty of sales recently, so I had an idea.
Right.
It's a cookie cutter home, right? So you know what it's going to appraise for. If it's a unique property, that's probably a little riskier.
That's always risky.
Call waiving the appraisal contingency. So everything you have to think it through.
Yeah.
But these are things that'll help you get the property.
Can be, right. Yep. But you got to be careful about it. All right. So number 7, we talked about having home inspections, but shorten that inspection period.
Right.
So back in the day when we had a normal market, it was fairly common to see 14 days.
Yeah.
Nobody says 14 days right now.
Really?
So 7 days, 5 days, as quick as you can. So if you're working with buyers, this is important. If you're working with a home inspection company and they can't get out there quickly, you got to punt. You got to go to another home inspection company. Don't work with somebody who says, yeah, it's going to be a week and a half before I can get out there.
It's got to make it tough on the home inspection companies, but it's just the way the market is, right?
It is. Yeah, it's just a fact. So try to shorten that up. I would say 7's probably your max right now in this market. But, again, you get into a stronger buyer's market, that can loosen up quite a bit. But for right now, when you're trying to make that offer stand out, shortening that inspection period can make a big difference, because then that gives the seller an idea that, okay, I'm going to take the property off the market for a little while.
It's not going to sit off the market for 14 days where how many potential
buyers might I lose? Yeah, so I'm not going to tie it up that long if I have a shorter inspection period. If they say 5 days, okay, I can deal with that.
Right.
Yeah, all right. Number 8 is offering a flexible possession agreement, and that can be called a couple of different things. So in the real estate world, the actual addendum is called a post-settlement occupancy agreement.
Correct.
But you can also hear it called a rent
back is what I call it.
That's a pretty common term. But if the seller is in a unique situation, like they need to sell quickly because they're buying another property and they want those proceeds, but say it's new construction and they need to be in the house for a little while. They don't have a place to go. If you offer a rent back, meaning that they can temporarily rent the property back from you after you've settled, after you own that property, meaning you're not taking full possession of it yet, that seller has a lot more.
You're giving them
leeway.
flexibility. They've got time to get their, because it's complicated when you're buying and selling a house at the same time.
Yep.
You've got to move to plan on. There could be some other dynamics that you're not thinking about. There could be children involved, school changes, a lot of things going on. So having a little extra time to plan those things out calmly certainly helps.
Yes. Now there's a max.
You did say this. I was just about to say that.
If you're financing the home, the maximum amount of time that you can extend that rent back period is 60 days.
For financing as a primary
residence. Your primary residence, yes. Because otherwise it's treated as an investment property.
The deed of trust says you will occupy this as your primary residence and you'll take occupancy within 60 days.
Yes.
So any longer than that, it makes it so you can't have a post-occupancy agreement in a contract that's over 60 days and expect to get primary
funding.
Residence financing on that. It would be an investment.
Now, if you're paying
property
cash, you can do whatever you want.
So another way to, we talked about it. I had somebody who's doing a post-occupancy agreement, and they are not, when we call rent back, it means that the people who sold you the house are living in it, so they're renting the house from you.
Right.
And they usually pay you it's a prorated part of your mortgage payment.
Could be a carrying costs situation. It could be a flat fee. It could be anything, or
it could be listed as a per diem amount.
Right, or
it could be zero.
It can be, and what we call that is nominal consideration, which just means, I'm going to let you live back in my now home for free for however long that is, 30 days. 45 days, 60 days. And if you get up to the 60-day mark, you've made a mortgage payment probably in that period, but that gives that seller, again, that much more flexibility. And at that point, it's less of a financial hit on them as well, because they're not having to pay you rent.
Hey, can you make a note so we have an insurer on that we ask them about potential liabilities to buyers? Because I've often wondered that.
We are going to have.
Yeah. Well, I think maybe an umbrella policy may help, but there might be some specific things you need to do when somebody's renting back from you.
Yeah. Well, and one of the things,
if
you have a rent back period, the buyer needs to get short-term insurance.
Yeah, absolutely. You have to think about. A lot of people probably don't think about things like that. Somebody's living in the house that you own. If something happens to them, they can sue you.
It's right. Yeah, exactly. All right. So yes, there are some risks involved, but if you want, again, this is about making your offer stand out. That rent back period may be really helpful. All right. Number 9, a little self-serving, but
that's why I'm laughing.
It is a little self-serving, but it's about working with a knowledgeable and experienced real estate agent.
Somebody like Bradford Cox.
It could be him. He's pretty good.
In the Vesta group of Long and Foster.
Well, yeah, but here's the thing: whoever you work with, this is not the market to work with your great aunt Susie's niece who just got her license and doesn't know what she's doing. I get that you want to give them the business, but this is not the time to work with an inexperienced agent.
Well, not if you're going after competitive homes and you need to know what you have to do to make your offer stand out and win. Yeah. If they don't have experience, especially if they do a purchase a year. Right.
Yeah,
they might not know.
That's not necessarily a finger on the pulse of the market.
Exactly right.
Yeah.
It's a little tougher. But not only that, just knowing somebody who has a sense as to what houses are going for. Real estate is super localized, so somebody who sells a lot of houses in northern Baltimore County will probably have a better idea of what that house will sell for, or what it'll take for that offer to be accepted, as opposed to somebody who lives in, let's say, Calvert County.
Yeah. Well, and we see that every once in a while too. We have people who use the buyer's agent that they had sell their house. They live in southern Maryland and they decide to move up here to Towson, and they use that agent down there. And I get that, because
they could be very well knowledgeable, but they might not know what it would take to win a local house.
And they may have done a super great job for you down there. But
it's something to be thought about.
You do need to work with somebody who knows that local market. All right, number 10, and again, I'm going to throw in a bonus or two, but number 10, I often have this conversation with buyers, and I think it's probably one of the most important things for buyers in this market to think about, especially when they're first-time buyers and maybe don't have a ton of money saved up.
Right.
Look below your maximum price. So you're going to have a conversation with a lender. You're going to sit down with Michael, and Michael's going to tell you you're approved up to X. Right? And that gives you a good idea.
Depending upon the property taxes. Right. I mean, it's hard to nail it down exactly, but you can have a range.
Right, right. But if you're buying in this market and you're trying to target the very top of your range, because that's where all the HGTV properties are, well, you're going to have a hard time competing, especially if you're a first-time buyer, because all those properties are going to go over list. So your ability to, I'm going to offer over list price. I'm going to cover the gap if the house doesn't appraise. Any of those kinds of things, harder to do that if you're buying at your maximum price.
Well, it's interesting from the lending standpoint. There's loan products out there that come with better rates if you use a certain part of your income. For example, if you're below 100% of the area median income, you can put 3% down, and all those loan level price adjustments that we've complained about go away. And it's the rate's going to be a lot better for you. But if you want to go, for example, if you have somebody who has a base salary and a commission, when you calculate their income, it's the income used to qualify. So you can look at only base income and not look at commission. And there are times when that income, your base income, is what you can use to qualify, and you fall below that area median income. And you're going to get a much better term. Going above it means, all right, not only let's say you want a house that's, let's say for $450, I can get you that first-time home buyer deal. But if you want to go above that level, you're going to have to use all your income, and you're going to be above the area median income. So that can mean a 3/8 to a half % higher in a mortgage rate.
Yep.
And the higher price point is going to mean a lot more in the mortgage payment.
Yep.
So it's definitely something to think about. And then you also have to think about, let's say you go a little bit below your max, that will enable you to cover. You might be below your max. Guess what? You might be able to do a 5 to 10% down payment.
Yep.
As opposed to the 3 or 3.5% down payment.
Mm-hmm.
And then to get the house you want a little below your max, you put in a little small appraisal gap of say $4, $5, $10,000, something like that.
Yep.
If the house doesn't appraise, then you can drop that 5 or 10 down to 5 or 3.5% down payment.
Sure.
Right, and still qualify for the loan.
Right.
So that's a great idea, Brad, to maybe look a little bit below at those homes.
Yep.
As opposed to the ones right up against your limit.
Yeah. All right. So I'm going to throw in number 11.
Turned it up to 11.
Turned up to 11. This isn't necessarily a way to make your offer stand out, but it is something that people often believe they should do to make your offer stand out.
I gave this advice several years ago.
Yeah.
On the radio show.
Yeah. And times have changed.
Times have changed.
So here's the thing. Don't write a buyer love letter. And by that we mean don't write the letter to the seller that says, "Dear seller, we love your house and you should sell it to us because." And almost anything you can think of to write into that letter for the because part is you stand a chance of violating fair housing law. Right? So, I'm going to talk about our family because the house has this beautiful backyard and we can put a swing set in there. And so I want them to know that we have kids and that, no. That's familial status.
Right.
Could be sexual orientation, could be a number of things that are violations of fair housing. So here's what the listing agreement and the buyer's agreements say now in the state of Maryland. We will not pass along a buyer letter that you've written. A buyer's agent's no longer allowed to pass it on to the listing agent. Listing agent's no longer allowed to pass that on to the seller. So you write a letter, it's not going through us. So just know that the offer itself should stand. The terms and the price that you put together should stand on their own. You shouldn't need a letter that says, "Hey, you should sell to us because."
Right.
All right. Now I'm going to add one more.
Going to 12?
I'm going to 12. Yeah.
You obviously don't know what top 10 means, but it's okay.
I know. Well, math's always been a challenge. But anyway.
That's why you have me in your life.
I do. It is. I'm going to say, and I mentioned it slightly before, but it's about considering the offer has to be considered in toto. And I'm not talking about Dorothy's dog, but, all aspects. That's the Latin phrase, in toto, meaning, as inclusive of all aspects. The offer has to be considered all aspects of the offer. So the price, the terms, how, who's your lender, what title company you're going to use, all those things, who's your agent can make a difference. So think about that when you're putting your offer together and work with your agent to craft the best offer in toto that you possibly can. Have the best possible price. Have the best possible terms. Be as flexible as you can.
So if you
don't risk the farm, but put the best offer. Put your best foot forward. This is not a market in which you can say, "Oh, well, I'm going to make this offer, and then they're going to counter me, and then we're going to go back and forth." That doesn't happen nowadays. It's everybody has to submit their highest and best offer by Monday at 5, and that's what you get. You get one shot, right?
It's a very challenging market for buyers.
Yes.
If you have a trusted agent, I think the best thing you can ask them, if you really want a house, is, what's it going to take for us to win this?
Yeah.
Ask them, listen to their answer.
Yeah.
And then weigh it whether you feel comfortable making an offer to do that.
Right.
For my example, I keep bringing it up because I've been through it. A house in Bethany Beach.
Yep.
What do we had plans to see 5 other places that Sunday.
Yeah.
We saw it. It was the first one of the day. and offers had to be in. I think we were done looking at it 11:45, 11 o'clock. All offers had to be in by noon that day.
Yep.
If we wanted it. Agent told us. I said, well, what do you need to get it? And she told us 15 over, appraisal waiver, home inspection. You have right to a home inspection, but not ask for any repairs.
Yep.
And all that was okay for me. And I was considering putting a large down payment, so the appraisal didn't matter.
Yeah.
One bit to me. House looked very well maintained, even though I'm not a home inspector. And it was a condominium. I mean, generally thinks the condo fees tend to maintain a
Cover
lot of
some of
things.
that stuff.
Right.
Right.
I felt very comfortable about making the offer, and we won because I listened to my agent. On the other hand, I've had buyers who recently didn't listen to their agent and have fired that agent because they didn't listen to him and they didn't win the offer, or didn't get the home because they listened but then got a little scared at the end and pulled back.
Yeah.
And this is what I want to talk to you about real quickly about this.
Yep.
$4,000 they didn't get the house.
I
How
know
much
that
does that
story.
matter over the next 5 to 10 years when you're going to own a home?
How about
as
not
far as
at all?
A couple bucks. If you're looking at the monthly payment, right?
Right.
$24 a month
Yeah.
is the difference.
Right.
That's nothing.
Right.
And, if you really love the house, it's, I guess, you're just worrying, nitpicking a little bit. Now, I can understand if there's some crazy examples out there where you got to go 100, 200, 500,000 over list to get a house.
They tend to be
really
the
want.
pricier properties.
Right, pricier, obviously.
Yeah.
I can see being scared about that, but if you want to be a homeowner, we've talked about past shows about being a homeowner.
Yep.
Sometimes you got to listen to your agent and follow their advice.
Yeah. Yeah. Great. All right, Michael. Well, that's our list.
Happy house hunting, folks.
Happy house hunting. And if you have any questions about any of the things that we go over, you can always get in touch with us, and we'll be happy to give you, other. This was just a few of the many tools in the toolkit. So have at it. Give us a call. We'll be happy to share our thoughts with you. All right, so Michael, when we come back, getting into the unreal and the spotlight. So we'll be back in just a sec.
Try it.
And we're back to Be Real, the Maryland Real Estate Podcast. I'm Brad Cox with the Vesta Group of Long & Foster, joined by my partner in crime,
Michael Becker of Sierra Pacific Mortgage.
Hey, Michael.
How you doing, buddy?
Doing okay. Yeah.
We're doing better than 78% of negative Nancy's.
Ooh.
No, they're not negative. They're being realistic.
They are being realistic.
So it's time for the unreal.
Time for the unreal.
And something popped out, a headline.
This was a headline, and it's a big headline. Americans believe it's the worst time ever to buy a house.
Now, that's not what they asked him. That was her
No,
take.
yeah.
That's the author's take on
it.
the
It is. That
on
was
the
Emily
Gallup
Peck.
poll.
Emily Peck with Axios Market wrote the article based on the Gallup survey.
So,
and they
of
do
all,
this every year. They've been doing it since 1978.
Well, I want to say something about the headline.
Oh, yeah.
The worst time?
Well, right.
So,
Well, that's because everything's the worst thing ever.
Exactly. So headlines are written these days to get clicks.
Yes, exactly.
And that's why it's done. So
it's the worst
let's tell the people what the
survey.
I think the survey is correct. I think the people who answered the question in the survey may potentially be correct.
Yeah. It's
the
a challenging
percentage
time.
is-
It's a challenging time.
78% of people think it's a bad time to buy a house.
Right.
Or it's not a good time to buy a house.
Right. Right.
Is it the same? Are those two the same? Or
Yeah.
either
Well.
side of the
Yeah.
coin?
Close. Yeah. Close enough.
Okay.
Right. Yep.
But 22% think it's a good time to buy.
That's right. And for those 22% of those people, they are ready.
They're ready.
78% probably aren't ready to buy that.
It's rates are up, values are up. The percentage, we were kind of crunching numbers during the break.
Yeah.
The percentage of median income it takes to buy a median home, and only using principal and interest, not taxes, insurance, is in the low to mid 30s.
Yeah.
And it was last time it was this high was in the late 70s, 78 or so.
Right around
which
78.
is when the last time this polling data was this low.
Was this? Yeah. Correct.
So it kind of makes sense. It's almost a
And they had a somewhat similar situation going on in 1978 because previous year to that year, there was a pretty big spike in prices, and there was
interest rates went up over 1%.
Yeah, over 1%. Now we laugh at a 1% increase now. Right?
I didn't used to, but yeah.
No, but yeah. I mean, to your point, you've said this in several episodes. It's the volatility that we're seeing now, the rapidity of the increases, and that how far they're jumping. We see, you can go a point in a week or a couple of days, whereas before it would take years for that adjustment to occur.
I mean, we've seen a quarter to a half point increase in mortgage rates just in the last week and a half.
Yeah, yeah. Yep. So
it's almost a good thing that, look, there's only so many houses for sale out there.
So that's a good point, right? That's a great way to look at this article and say, it's probably a good thing that that's what their attitude is, because with the paucity of the homes available for sale, if you had 78, let's just flip it. If you had 78% of people saying, hey, it's a great time to buy a house, competition would be much higher. Supply and demand would be off the hook. And so every property would be going $100,000 over list.
So let me add. So the same day that week that poll came out, home builders' confidence rose to a 10-month high.
Yeah,
they can see the demand out there. So they're probably encouraged and may start building more homes. If that happens and rates drop a little bit and more people list their homes, we may get to a more balanced market, which is something we'd really like to see.
We would love to see that.
Everybody would like to see lower interest rates. But if interest rates were to drop and inventory did not increase and new home building didn't increase, we'd be in a situation. The craziness is, like, I guess I want to say late 2021 is when it was so hard to get an offer accepted. You had clients 14, 15 off, and it was common to have somebody make offer 13, 14, 15 times
before they finally get an offer accepted. Yeah,
accept it. Unless you're somebody who's willing to sell the farm to buy a house, so to speak.
Right.
So it's not as bad as. It's not that the housing market is terrible, that property, guess what? Only 22% of people think it's a good time to buy a house, yet housing values are still going up.
Absolutely.
Oh, so that's the important take on this.
Yep.
Only a small percentage of people think it's a good time to buy. Good, because there's only a few homes for sale out there.
Yeah. We're actually fortunate that that's the case.
Absolutely.
All right, so Michael,
yes,
going to roll right in now to the spotlight. Yeah. So you remember how we talked about where we went for Mother's Day?
Yeah.
And I told you where we went, and you said you might have to spotlight them.
And now you're doing it.
Well, now we're doing it. Yeah. So want to talk about La Cuchara. And I love this place. It's they're at 3600 Clipper Mill Road, right in the historic Meadow Mill over in the mills near Hamden. And years ago, little historical trivia. It was actually home of the London Fog Raincoat Company.
Oh, I remember that. Yeah, driving down 83, you would see the London. Yeah.
Right. Well, so the building itself was built in like 1877. But they remodeled it in its current state in 2015. It's a beautiful restaurant, nice brick, and they have a huge bar in the center and nice wood burning grill. They've got indoor and outdoor dining. But anyway, it's like Basque inspired food. Northern Spain, southern France, the Basque region.
I do.
So it's all driven by these kind of seasonal local ingredients. And so each visit, every time you go, you can have a different experience because the menu changes.
It's always nice to have a place to go to where there's multiple things you want to have that makes you come back.
Yeah, and everything we've had there has been fantastic.
I'm looking at the local menu right now. So you said Basque food, yet it's also Mid-Atlantic inspired.
Sure, because they've got plenty of seafood there.
Crispy soft-shell crab.
Yeah.
I love my soft
And that's not on the menu every day.
I'm
so
sure
it
it's
is.
not.
Yeah, right. Now, and they also have tons of appetizers, cheeses, tapas, and just some beautiful. They always have some kind of beef. They always have a couple of things of fish and then a couple other things. Sometimes they have a vegetarian option, but yeah, so good.
I looked at the menu again.
Yeah.
I would get the rabbit paella.
I'm
Giggling because I was thinking of the Hassenpfeffer Bugs Bunny. Have you ever seen that one? Cook, bring me Hassenpfeffer. Everybody who's listening to this, Google Hassenpfeffer.
Right. Right. Yeah. And wasn't that also in the song with Laverne and Shirley too?
I don't know. No. No. I think it's something else. I'll have to look up the words, and I'll mention it next podcast. But
all right.
Anyway.
But yeah, so
but I would
they're open. So yeah, can you eat the rabbit? Yeah.
I would eat rabbit.
Paella.
Don't hate me for eating rabbit.
So good. All right. Well, so they're open Sunday through Thursday, 5 to 9. Friday and Saturday, it's 5 to 10. They're owned and operated by Ben, Jake, and Amy Leffenfeld, and they're on Instagram at La Cuchara Baltimore. That's L-A, and then Cuchara Baltimore. So La Cuchara Baltimore. Or you can call them 443-708-3838. If you haven't been, they are worth the trip, and the food is amazing. The restaurant's beautiful. Service has been outstanding. We've just never had a bad experience there. So check them out, La Cuchara. All right, so Michael.
Yes, sir.
We're gonna juggle a few things before we decide exactly what our next episode is going to be. It's going to be a phenomenal episode, but there's a couple of things coming up in our podcast that we're kind of weighing. So we're gonna decide in the next couple of days what our next episode is going to be. So we're going to have that announcement maybe via social media.
Okay.
So check us out. But if you want to listen to us, you can find us on any of the major podcast platforms. You can also visit BeRealPod.com, our website. And on that website, you can also add comments, send us some feedback. Let us know what you're thinking. Let us know what you want us to talk about, how we're doing. Any of that feedback is welcome. We're also now on YouTube, so if you go to YouTube, you can search for @BeRealMDPod, and you can listen there. And of course, if you can subscribe and like and comment there, that really helps us out.
Yep.
So we'd greatly appreciate that. And if you get a chance and you listen to any of these episodes, if you share that out with somebody who you think may benefit from this information, we would be grateful.
Sounds good.
So, Michael. Another great episode in the book, episode 19.
19 down.
Yeah.
All right.
The big 2-0 next week. Yeah. So, looking forward to that. And as always, Michael.
What? You want to give out some information how people can get in touch
Yes.
with you? Don't forget that.
If they need to reach you,
they can call me, 443-310-0012. 443-310-0012. Or email me at michael.becker@spmc.com.
And if you need to reach me, you can reach me on my cell, 410-375-7550, or via email at brad@homesbyvesta.com. All right, so another great episode of Be Real. Folks,
thanks for listening.
Really appreciate you being here, and we'll talk to you the next time, in the next episode of Be Real,
the Maryland Real Estate Podcast.
Take care.
Try me.